Hello and welcome back to the Deep Dive. Today, we are going to do something a little bit different. I want you to start by closing your eyes for a second. Well, obviously, not if you're driving or operating heavy machinery. But if you can, just close your eyes and picture the last time you really, truly tried to learn something complex.
That's a specific kind of memory.
It is, isn't it? Maybe it was a massive, 10-pound textbook you had to buy for some professional certification.
Been there.
Or maybe it was a dense scientific journal article you were trying to parse through for a work project. Or maybe it was just a really slick, interactive corporate training module that your HR department sent out on cybersecurity.
It's a pretty universal experience for any professional these days. We engage with these materials constantly. We live in the information economy, after all.
Exactly. And when we look at those materials, what do we actually see? I mean, what do we notice?
You see the author's name, the title.
Right. The author's name in big, bold letters.
Yeah.
You see the publisher's logo, a penguin, a McGraw-Hill, a Macmillan, a Wiley. We tend to obsess over the brand. We think about the prestige of the source. But I've been thinking about this a lot lately, and it's really the hook for today's deep dive. Who actually built it?
That's a great question. You mean the physical or I guess the digital construction of the thing itself?
Right. Who took the author's raw, probably very messy Word manuscript and turned it into a searchable, interactive, ADA-compliant, perfectly typeset piece of digital reality?
Yeah.
Who made the charts pop up when you clicked them? Who ensured the chemical formulas were rendered correctly on your iPad? Who is the invisible engine running underneath the global knowledge economy? Because it turns out, it's not always the name on the cover.
No, it rarely is. And that brings us, I think, very neatly to the subject of today's deep dive. We are looking at a company called MPS Limited, or MPSLTD.
Yeah.
And you are right to call them an invisible engine. They are not a household name for the average person. You aren't going to see a Super Bowl commercial for MPS.
Yeah.
But for the publishing world, they are the plumbing.
The plumbing. I like that image. It's essential, it's everywhere, but nobody really notices it until it breaks.
It fits perfectly, but I'd actually go a step further than just plumbing. They aren't just the pipes anymore. They are, in a way, becoming the architects of the digital infrastructure. This is a company that sits right at the intersection of old school, dusty, ink-on-paper publishing and the high-speed, futuristic world of edtech.
And that is exactly the mission for this deep dive. We are going to unpack how this company, which actually started over 40 years ago as a subsidiary of the publishing giant Macmillan, has evolved into this debt-free, high-margin technology powerhouse.
It really is a fascinating case study in what we call digital transformation. You hear that buzzword thrown around in every corporate boardroom in the world, but usually it's just fluff.
Right.
Here, we are seeing what it actually looks like in practice. How do you take a legacy industry like publishing, which, let's be honest, is as traditional as it gets, and not only survive the internet age, but actually thrive in it?
And the answer seems to be
Yeah.
MPS shows the way by stopping being just a service provider and becoming the platform.
Exactly. From doer to enabler. That's the shift.
We have a great stack of sources today to help us figure this out. We're looking at the recent financial reports, which are surprisingly transparent. We have some strategic analyses of their roadmap, which they call Vision 2027.
Right.
And we got breakdowns of a very interesting recent acquisition they made, a company called Unbound Medicine, which cost them about, $16.5 million?
Which is a significant move for them, and we will definitely break down why that specific purchase matters so much.
Huge implications there.
Yeah.
So let's dive right in. Section 1. What actually is MPS Limited? Because I think there's a misconception right off the bat that they are a publisher. If I go to a bookstore or log on to Amazon, I'm not going to find a novel by MPS, am I?
No, absolutely not. And that is the most important distinction to make right off the bat. MPS is strictly B2B, business to business. They operate entirely in the background. They don't sell content to you or me. They sell services and technology to the people who sell content to us.
So their target clients are the titans of the industry.
The heavy hitters, yeah. We're talking about the major global publishers, huge learning companies, corporate institutions, university libraries, and what the industry calls aggregators, those massive databases that host thousands of academic journals.
And geographically, this is interesting because they are listed on the stock exchange in India. They're based in Noida, which is a major tech hub near Delhi. But if I'm reading the financials right, they don't actually make their money in India.
That's right. They are what we call a 100% export-oriented unit. So their operations are in India, leveraging that, cost advantage of a skilled but cost-effective workforce.
Sure, makes sense.
But at their revenue, it's almost entirely coming from the West. We're talking $3.29 billion from the United States and $2.21 billion from Europe.
So they're selling into the strongest currencies in the world.
The dollar, the euro, the pound.
Yeah.
Exactly.
Okay, so they are selling services to Western publishers. But let's drill down on services. Because services is such a vague consulting-style word. If I'm a client, what am I actually writing a check for? I see three main pillars in their business model. Let's break those down because I think understanding the mix is key to understanding their profitability.
Sure. This structure is really the skeleton of the company. The first pillar is the legacy business, what they call content solutions.
This is the bread and butter, the original factory floor.
It is. It's still about 53% of their revenue, so it's the majority. Think of this as the making of the content. Editorial services, copy editing, proofreading, indexing, typesetting. It ranges from pre-K-12 textbooks all the way up to incredibly complex scientific and medical journals.
Let's pause on typesetting for a second, because I think people hear that and they think of a guy with a printing press in the 1950s.
Right.
But in the context of a modern scientific journal, typesetting is actually really, really hard, isn't it?
Incredibly hard. It's a whole different ballgame. Imagine a scientist submits a raw Word document about organic chemistry. It's full of complex hexagonal molecular structures, reaction arrows, superscripts, subscripts, Greek letters.
A total mess to format.
A total mess. If you just copy-paste that into a website, it breaks. It looks like garbage. MPS takes that raw, messy input and codes it, usually into something called XML, so that those chemical structures render perfectly whether you are looking at it on a 4K monitor, an iPhone, or a printed page.
So they're basically translating the language of science into the language of computers.
Precisely. And they do this at scale for thousands and thousands of articles a day. That's the content solutions pillar.
Okay. Pillar one. Got it.
But the second pillar, and this is where it gets exciting for investors and tech watchers, is platform solutions.
The tech.
The tech. This is the high growth area. Instead of just fixing the text for the publisher, MPS is now saying, why don't you just rent the software we built to manage this whole workflow?
Ah, so moving from a service to a product.
Exactly. They have cloud-based platforms that act as the operating system for publishing.
I looked up a few of these. They have one called DigiCore, which automates the publishing workflow, and they have MPStrack.
MPStrack is a great example to visualize. Think of it like the Domino's pizza tracker, but for a manuscript.
I love that comparison. Your article has been received by the editor.
Your article is now in copy editing.
Your article is currently in the oven.
Basically. In the old days, an author would submit a draft and then hear nothing for 6 months. It was a total black box. They didn't know if it was being read, edited, or if it was lost in the mail.
Right.
With MPStrack, the author, the editor, and the production manager can see exactly where the file is in real time. It's in typesetting. It's waiting for legal review.
That adds a layer of transparency to a notoriously opaque process.
It does. And transparency builds trust and efficiency. They also have TheNK360 for content delivery and ScholarStore for hosting. This segment is just crucial because software scales so much better than human editing.
Explain that a bit more.
Well, if you double your clients in the human editing business, you need to hire double the editors. That's expensive and slow. But if you double your clients in platform solutions...
You just provision a little more server space.
Exactly. The marginal cost is near zero.
And that is why the margins on the platform side are so juicy.
That's where the profit is. And then the third pillar is e-learning solutions.
Right. This is the modern twist. We aren't just talking about books anymore. We're not even just talking about articles.
No. Not at all. We're talking about digital learning platforms, serious games, simulations for corporate training, higher education.
Serious games.
Yeah.
That sounds like an oxymoron.
It does, doesn't it? But think about corporate training. If your company needs you to learn about, say, cybersecurity, they could send you a 50-page PDF policy document that you will never read.
And I definitely won't.
Of course not. Or they could have you play a simulation where you are a hacker trying to break into a company's bank, and by playing, you learn the vulnerabilities firsthand.
Yeah.
MPS builds the back end of those kinds of interactive experiences.
That makes so much sense. Engagement is the metric everyone is chasing now.
Correct. So you have content, which is making the stuff. You have platform, which is hosting the stuff. And you have e-learning, which is building the interactive experiences with the stuff.
I love analogies, so let me try one out on you to see if I've got this right.
Go for it.
If a publisher, say, a big name like Wiley, is the architect who designs the building and says, we want a skyscraper here, and we want it to look like this.
Okay, I'm following.
Then MPS is the general contractor. They're the ones who actually pour the concrete, install the wiring, ensure the building passes inspection, which acts as the accessibility compliance, and hand over the keys.
That is a near-perfect analogy, and to extend it, with their platform solutions business, they are now also selling the project management software that the architect uses to manage the construction site.
So they are the contractor and the software provider.
They're becoming indispensable at multiple points in the process.
Okay, so that's the what. They build the infrastructure for the people who sell the knowledge. But let's move to section 2, the structural tailwinds. Because I always ask this question when looking at outsourcers, why? Why doesn't the giant publisher just do this themselves? Why not hire a bunch of people in-house to do the coding and the editing?
It's the classic buy versus build dilemma, but on a massive scale. You have to look at the global publishing market, specifically the STM sector, scientific, technical, and medical. It is massive.
How massive are we talking?
We're estimating it somewhere between $100 billion and $150 billion globally.
That is a staggering amount of money flowing through academic and technical knowledge.
It is. But for the publishers themselves, the margins are constantly under pressure. They are realizing that their core competency, the thing they are actually good at, is acquiring great content. Their job is to find the next Nobel Prize winner, to identify the breakthrough cancer research, to curate the best history textbooks. They are curators and talent scouts.
They're not technology companies.
They hate managing dev teams, seriously. Dealing with XML coding, converting files to HTML5, ensuring cross-browser compatibility, updating servers, that is a massive ongoing headache.
It's the messy middle.
That's exactly it. That is the messy middle of production. And MPS basically comes in and says, give us the headache, we will do it cheaper, faster, and better, because this is all we do all day, every day.
And there are demographic drivers here too, right?
Right.
It's not just about a company trying to cut costs.
Absolutely. There are huge societal shifts pushing this. Look at the two ends of the demographic spectrum. In the US and Europe, you have aging populations.
Which usually sounds like a negative for education, right? You think of school as being for young people.
Counterintuitively, an aging population is a huge positive for professional education because as the workforce ages and technology evolves at an accelerating pace, professionals need constant upskilling.
Lifelong learning.
Lifelong learning, exactly. You can't just get a medical degree at 25 and be done for 40 years. Nurses, doctors, engineers, they need re-credentialing constantly. New drugs come out, new surgical techniques, new coding languages. That requires a constant stream of complex, verified learning materials.
And on the flip side of that, you have the youth bulge in APAC, Asia Pacific.
Right. Millions upon millions of students entering the K-12 and higher education systems in India, Vietnam, Indonesia. They all need textbooks and digital learning aids. So you have this incredible demand on both ends of the age spectrum, the young needing the basics and the old needing specialization.
There's one more tailwind I want to drill into because I think it's often overlooked by investors and casual observers.
Yeah.
And that's the digital mandate and all the regulation that comes with it.
This is huge, and it's a major source of their competitive moat. A few years ago, making a book digital just meant, scanning the pages and making a PDF.
Right. Here is a picture of the book on your screen. Yes. Very basic.
Exactly. That doesn't fly anymore. We are seeing incredibly strict requirements, particularly in the US and Europe, regarding accessibility. In the US, it's the ADA, the Americans with Disabilities Act. In Europe, it's the European Accessibility Act. Content must be accessible to people with visual or hearing impairments.
So we're talking about things like screen readers, alt text for images, adjustable contrast.
It goes much, much deeper than that. It requires specialized tagging deep in the code of the document. For example, if you have a chart showing the trajectory of inflation, a blind person's screen reader needs to be able to describe that data trend, not just say image of a chart.
That sounds incredibly tedious to code manually for every single image in every single publication.
It is, and your old school copy editor doesn't know how to do that. They know grammar, they know the Chicago Manual of Style, they don't know ARIA tags or WCAG compliance standards.
But MPS does.
MPS does. They have built the tech to automate much of that tagging, so it's no longer a nice to have, it's a legal necessity. If a publisher doesn't do it, they get sued. Simple as that.
It turns compliance, which is a cost center, into a revenue stream for them.
Precisely. Now, let's look at how all these tailwinds hit the bank account. Because usually when you look at a service company, essentially a company selling labor hours, you expect low margins. razor thin.
I pulled the financials, and this, for me, was the real aha moment reading the report. Their revenue is $7.45 billion trailing 12 months. Decent size. But the margins. The gross margin is nearly 57%. Net profit margin is over 23%.
Which is astonishing.
That is incredibly high. I mean, compare that to a typical service business or even retail. Grocery stores run on like, what, 2% margins? Even some very successful tech companies don't hit 23% net. What is driving that efficiency?
It's the mix shift we talked about earlier. This is the proof in the pudding that the platform strategy is working. As they shift more and more of their revenue to those platform solutions, the software side, the overall margins expand.
Because they aren't paying a human for every hour of work anymore.
Right. I noticed in the report regarding their acquisition of AJE, which is American Journal Experts, they saw something like an 88.9% growth in platform revenue from that single unit.
Wow.
So that one acquisition is just lifting the whole ship.
It does.
Yeah.
And it signals that they are successfully breaking the link between revenue growth and headcount growth. That is the holy grail for a service business. If you can grow your revenue by 20%, but only grow your staff by 2%, your profits just explode.
That is what we call operating leverage, and they are demonstrating it perfectly.
Okay, so they are profitable, they're in a growing market, they have high margins. But I want to play devil's advocate now. Let's move into Section 3, the competitive moat. Why, MPS, why can't I just go on Upwork and hire 1,000 freelancers in the Philippines to format my journals? Or why doesn't a competitor just come in and undercut them on price?
You could try the Upwork route, but you would almost certainly fail. And the moat here is what we call full service integration or vertical integration.
Explain that. What does that mean in practice?
It means MPS handles the entire chain. From the moment the author hits send on that raw, messy file, MPS can handle literally everything. The editorial, the graphics, the legal permissions for images, the coding, the accessibility check, all the way to the final delivery on a learning management system.
So as the publisher, I just have one phone number to call.
One throat to choke. If you hire freelancers, you become the project manager of 1,000 scattered workers. You have to check their work, pay their invoices, deal with them ghosting you. It becomes a management nightmare.
Simplification is a product in itself.
It is. The publisher just wants the job done. They don't want to manage the process. And then you have the vendor lock-in effect provided by the tech. This is critical.
This is the sticky part.
This is the really sticky part. If a major publisher like Wiley or Elsevier integrates their entire production workflow with MPS's Digicore software, if their editors are logging into Digicore every single day, if their data and archives live in Digicore, imagine the pain of switching.
It would be a nightmare. You'd have to retrain your entire global staff. You'd have to migrate terabytes of data. You'd risk missing publication deadlines.
It's excruciatingly painful. So they don't switch. Once MPS is in, they stay in. The churn rate is likely very, very low for these platform clients because the switching costs are just too high.
So they've actually become the operating system of the client's production department.
Exactly. And I assume the history plays a role here, too. We mentioned they started as part of Macmillan.
A huge role. In the B2B world, trust is currency. MPS started as a subsidiary of Macmillan over 40 years ago. They spun out, but they have that pedigree. They aren't some 2-year-old startup trying to convince Elsevier that they know how to handle sensitive pre-release scientific data or medical studies.
They've got the track record.
They have 4 decades of proof.
And their physical footprint matters too, right? They have offices in the US and Europe.
Right, which is key. They can take a client to lunch in New York or London. They have a face in the Western markets. But the heavy lifting, the actual production work, is done back in India where the cost base is lower.
It's the front office, back office model perfected. Now, there is one area where they have historically been weak, and it's important to mention this, and that is client concentration.
I saw this in the risk factors. In the past, they were heavily dependent on just a few big names.
Right. I mean, if you have 3 customers and one of them leaves, your stock goes to 0. It's a huge risk. They have been working very hard to dilute this. Currently, the top 15 customers contribute about 58% of revenue.
That still sounds kind of high to me.
It is high compared to a consumer company like Coca-Cola, for sure. But in the specialized world of STM publishing, where there are only maybe 20 or 30 major players globally, it's a massive improvement from where they were. And it's trending in the right direction as they acquire smaller companies and diversify their client base.
Let's talk about their bank account, because in the current economic climate high interest rates, a lot of uncertainty, cash is king.
And MPS is sitting on the throne. They are nearly debt-free. Their debt-to-EBITDA ratio is 0.02.
Just to clarify for the listener, debt to EBITDA basically measures how many years of profit it would take to pay off all your debt.
Yeah.
A ratio of 0.02 means.
It means they could pay off their entire debt load in about a week. It's effectively zero. They have no interest payments dragging down their profits.
And they have a war chest of cash.
They do. Cash and cash equivalents of around 117 crore. This allows them to sleep well at night, sure. But more importantly, it allows them to be the predator, not the prey. When the economy tightens, smaller, debt-heavy competitors might go bust. MPS can just keep chugging along, or better yet, buy those struggling competitors for pennies on the dollar.
Which is the perfect segue to Section 4, growth strategy. Because you don't just sit on a pile of cash, you deploy it. This brings us to their Vision 2027. What is the vision?
The vision is a rebranding, but it's a substantive one. They want to stop being seen as just a service provider, a pair of hands you can hire, and start being seen as a learning company.
That sounds a bit like marketing speak. We aren't a plumber, we are a sanitation engineer. What does it actually mean for the business?
It means moving from volume to value. Instead of their sales pitch being, we can process 10,000 pages for you at $5 a page, they want to say, we provide the experiential technology that helps your users actually learn and retain information. It's a move up the value chain. If you are just doing volume, you are a commodity. If you are providing value, you are a partner.
And how do they achieve that?
The primary engine for this transformation is acquisitions, smart, targeted acquisitions.
And this brings us to the big news. The acquisition of Unbound Medicine.
Yes, this is the linchpin of the recent strategy.
They spent $16.5 million on this. That is a significant chunk of change for a company of this size. Why Unbound Medicine? What did they buy?
They bought an entry ticket into the U.S. healthcare system. Unbound Medicine specializes in the medical and clinical market. They build mobile apps and digital tools specifically for nursing education and clinical reference.
So paint a picture for me. How is this used in the real world?
Okay, imagine a nurse on a busy hospital ward. She's about to administer a medication she hasn't used in a while. She needs to check the dosage or potential interactions with other drugs the patient is on. She pulls out her phone, opens an app powered by Unbound Medicine, and gets the verified, up-to-date answer in seconds.
Okay, so that is a very high-stakes interaction. You can't get that wrong.
Extremely high stakes. And think about the value of that user. That isn't a student buying a one-time textbook for English 101. That is a licensed professional using a critical tool daily as part of their job. This is what we call an ecosystem expansion. By owning Unbound, MPS now has a direct foothold in American hospitals and nursing schools.
So they aren't just selling to the publisher anymore. They are getting closer and closer to the end user.
Correct. And they can cross-sell. They can take their other e-learning capabilities, those simulations we talked about, and sell them to Unbound's existing client base. Hey, you use our reference app for your nurses. Why don't you also use our simulation for training new nurses on patient intake procedures?
It's a very smart, strategic move.
It is, because it aligns perfectly with that aging population tailwind we talked about. Healthcare education is recession-proof. People always get sick, and nurses always need training.
And I saw another note here. They also fully own a company called Liberate as of October 2025.
Yes, another strategic piece of the puzzle. Liberate is more on the corporate training side of things. So you see the pattern emerging. They are buying these specific capabilities to broaden their platform. They are assembling a puzzle where the final picture is a comprehensive global learning platform that can serve academia, healthcare, and corporate clients.
I also want to touch on their internal operations, because the report mentions a digital shift inside the company. It's not just about what they sell, but how they work.
Right. They aren't just selling tech, they are using it to become more efficient themselves. They are strictly monitoring their own metrics. One number that stood out to me was their debtor days, which is the average time it takes to get paid by your clients. It's around 69 days.
Is it good? 69 days sounds like a long time to wait for a paycheck.
For the publishing industry, it's actually quite good. Publishers are notorious for paying slowly. They are huge bureaucracies with complex, slow-moving accounting departments. The fact that MPS gets paid in just over 2 months shows they have leverage with their clients. It means they aren't desperate. And efficient internal collection systems keep the cash flow healthy, which in turn funds that war chest we talked about.
Okay, so far, I have to admit, this sounds like a perfect company. It's almost too good to be true. High margins, debt-free, growing markets, smart acquisitions. But this is the deep dive, and we are allergic to hype.
Of course.
We have to look at the dark side. We have to ask, what kills this business? Let's move to Section 5, the risks. What could go wrong here?
A lot could go wrong. And there is one massive, blinking red elephant in the room.
It's 2 letters. AI.
The AI threat.
It's the obvious question, isn't it? If MPS makes a significant chunk of its money by editing, proofreading, summarizing, and coding content, surely ChatGPT, Gemini, or Claude can do that now, or will be able to do it flawlessly in 6 months.
That is the existential risk. Technology disruption is the #1 threat here. Generative AI is getting terrifyingly good at summarizing text, fixing grammar, and even writing code. Theoretically, it could completely slash the demand for human editorial services.
So if a publisher can just run a raw manuscript through an enterprise version of GPT-5 for pennies, why would they pay MPS millions of dollars?
Exactly. That creates what we call deflationary pressure.
Yeah.
Even if MPS manages to keep the client, they might have to lower their prices drastically to compete with the cost of AI. The publisher might come to them and say, why are you charging me $50 an hour for editing when the AI does it for 5 cents?
That's a race to the bottom. You can't win.
You can't?
So is there a counterpoint? Because usually these technological shifts are more nuanced than just robots take everyone's jobs.
There is. And this is the debate currently raging inside the industry. The counterpoint is that MPS knows this. They are not ostriches with their heads in the sand. They are aggressively trying to integrate AI and machine learning into their own platforms.
So if you can't beat them, join them.
More like co-opt them. They want to be the ones selling the AI tool to the publisher. They want to be able to say, hey, don't use the public ChatGPT. It's unsafe. It hallucinates facts. It puts your intellectual property at risk. Use our proprietary AI-powered DigiCore platform. It's trained on your specific data. It's secure. And crucially, we have humans in the loop to verify the output.
That human in the loop part seems absolutely vital, especially for their market.
It is. You have to remember the hallucination problem with AI. In STM publishing, scientific, technical, and medical, you cannot have errors. The stakes are too high.
Right. If the AI hallucinates a dosage in a medical journal, people could literally die.
Exactly. Or if it hallucinates a chemical reaction in a chemistry journal, a lab could explode. The liability is massive. So there will likely always need to be a layer of human verification, of liability management. MPS wants to be that layer. They want to be the safety net between the raw AI output and the final published product.
So the bet is, can they adopt the tech and pivot their business model faster than the tech destroys their old business model?
That's the multi-billion-dollar bet. They have to pivot from being editors to being AI wranglers.
What about competition from the big guys? We talked about freelancers on Upwork, but what about Google or Microsoft or some huge private equity firm?
That's the big fish risk. The edtech market is full of giants. If a massive player decides they want to own the plumbing of publishing, MPS is still just a mid-cap company. They could get squeezed out or simply bought out.
It's always a risk when you operate in a profitable niche. Eventually, the sharks smell the blood in the water, or in this case, the money in the water.
True. And we still have that concentration risk we mentioned.
Yes, the 15 customers.
Relying on 15 customers for nearly 60% of your revenue is still a scary proposition. If just one big merger happens in the publishing world, say, 2 of their biggest clients merge and decide to consolidate vendors to save money, MPS could lose 10% or 20% of their revenue overnight through no fault of their own. Just pure corporate synergy.
There was also something a little weird in the sources about the management team.
The black box problem.
Yeah. We usually have a lot of info on the CEO, the visionaries behind the company. We know their stories. But here, it's a bit opaque, isn't it?
It is. The corporate reporting is very by the book. We know from a filing that a director resigned in February 2026. But the sources didn't say who it was or why. It was just a footnote.
That's always a little unnerving. You want to know what's happening behind the curtain.
For an investor, it's a yellow flag. It's what we call key person risk, combined with a lack of transparency. We know the ship is sailing efficiently. The numbers tell us that. But we don't know much about the captains on the bridge. If there's internal turmoil we can't see, that could derail the whole Vision 2027 plan. We're trusting the system, not necessarily the personalities.
So, we've looked at the good, the bad, and the plumbing. Let's move to Section 6, the synthesis, the so what. Why should the listener care about a mid-sized Indian B2B publishing services company?
Well, if you take a step back, the investment case, theoretically speaking, of course, is pretty compelling if you like boring, compounding businesses.
Boring is beautiful.
It often is in investing. You have high margins over 30% EBITDA. You are debt-free in a high-interest rate world, you pay consistent dividends, and you have a clear history of growth. Revenue was up 33% recently. It's not a sexy consumer brand. You'll never wear an MPS t-shirt. You'll never see an MPS bumper sticker. But it's a compounding machine. It's the kind of company that quietly makes people rich over a decade, not overnight.
And for the learner listening to this, the person who isn't an investor but just loves understanding how the world works.
For the learner, the takeaway is realization. It's about seeing the matrix. Next time you are clicking through a slick e-learning course at your job, or reading a perfectly formatted digital textbook on your tablet, I want you to realize that it's very likely powered by a company exactly like MPS.
It represents the industrialization of knowledge.
That's the perfect phrase for it. We have moved from the artisanal era of publishing, monks in a room or eccentric editors with red pens and a glass of whiskey to the mass production digital platform era. MPS is the factory floor of that new era.
They've streamlined it.
They have streamlined the transfer of information from one brain to another. They've turned knowledge transfer into a repeatable, scalable industrial process.
It's a wild thought. We consume so much information, but we rarely, if ever, think about the supply chain of that information. We care about the supply chain of our coffee or our sneakers, but not our knowledge.
We don't, and that supply chain is becoming more technological, more consolidated, and more automated every single day. MPS is essentially building the conveyor belts for the information age.
So as we wrap up, I want to leave our listeners with a final provocative thought. We talked a lot about AI, and we talked about verification.
Yes.
As AI generates more and more and more content, infinite content, really the cost of creating text basically goes to zero. I can generate a textbook in 10 minutes. I can generate 1,000 articles in now.
But we are entering an era of massive content inflation.
Exactly.
Right.
But if content is infinite and cheap, what becomes rare and expensive?
Trust.
The value of verifying that content, the value of structuring it, citing it, and ensuring it's accessible and legally compliant.
That value goes through the roof. Trust becomes the premium asset in a world of infinite noise.
So is MPS an endangered species because AI can write? Or are they the future gatekeepers who will be paid to organize the chaos that AI creates?
That is the billion-dollar question, isn't it? In a world of infinite content, the king is not the writer. The king is the one who builds the library.
The king is the one who builds the library. I love that. A perfect place to end.
It's the only way to make sense of the noise that's coming.
Well, on that note, we will leave you to ponder the plumbing of the internet. Thanks for taking the deep dive with us.